Good morning and welcome back to another episode of my weekend market analysis series. In this video, we are diving deep into the GBPUSD market dynamic, providing you with a comprehensive analysis from both fundamental and price action based perspective. Stick with me for the next 10 minutes. Each moment is packed with valuable insights. I promise by the end you will be well equipped to navigate the JPUSD market independently. Before we dive into next week's expectations, let's briefly reflect on the key moments that influenced our decisions last week. Recall that by the end of the previous week, the British pound outperformed the US dollar, reaching a 3 week high around the 1.29500 zone. As you will see on your screen right now, this was actually our trading setup prior to the beginning of last week's session. And of course, we had some various factors on the chart, and everything at the beginning of last week was screaming that price will likely be going to the upside. First of all, we had a descending channel. Remember, after connecting the series of lower highs, we had the resistant line of that descending channel. And of course, we had a support line here after connecting the series of lower lows. And of course, with price sitting above our key level at the 1.275, an area that shared a beautiful confluence with the resistant line of that descending channel, we had no other choice than to look out for buying opportunity if price action continued to find buy pressure above this important confluence. And this was exactly what happened. We joined the bullish momentum at the breakout of the 1.275 and the 1.277300 area, capitalizing on this approximately 200 pips move all the way into that 1.29500 area. For educational purposes, you can find a detailed breakdown of each of our entry points right in the description box of this current video. Everything seems rosy for the British pound at the moment as the economy grew by 0.6% in the second quarter of 2024. And it is widely reported that this expansion was driven by increased government spending. However, the uptrend continuation might not be so clear-cut as the UK inflation rose less than market had expected, increasing the odds of a back-to-back rate cut by the Bank of England. On the other hand, the British pound could find support from strong consumer spending, as we saw from last week's retail sales report that data shows a rise by 0.5% monthly and a 1.4% annually. Additionally, rising sentiment around the Fed's likelihood of cutting interest rate next month could further impact the British pound positively. Now, this leaves us at a critical juncture where understanding the current market structure is crucial to anticipating the next move. To decode the language of the market, we are going to be dissecting the JPUSD chart to uncover the hidden clues that will reveal the majority's direction in the coming week. We will be identifying the major trend, pinpointing the key level to watch out for, and of course, structural patterns that could give us that trading edge we are looking for. But before we begin, remember this presentation is for educational purposes only and not financial advice. Trading carries risk, so please consult a financial advisor before making any investment decisions. With that said, let's dive right into the business. So, we are going to be starting from the daily time frame, and first off, let's connect the series of higher lows on this chart, and it's clear that price action is trending upward. However, one thing that stands out is that despite the strong bullish momentum you see here, price has yet to retest the previous high from July of last year around the 400 level, as you will see here. That's an entire year where buyers have struggled to push beyond that level. Now, with the recent surge and growing sentiment around the Fed's potentially cutting interest rate next month, could the pound sterling capitalize on a weaker dollar? Are we on the verge of finally testing and possibly surpassing that resistant level? Well, to answer this question, I have a couple of parameters here on this chart that we are going to be using to navigate this current structure. Now, zooming into the character of price action in the last 1 year, that's since July of 2023, I have a key level situated at the 1.2800 area. As you will see here, this level had played a significant role in determining the direction of price action in the last 1 year. If we take a closer look, you will see as at June of last year, it was a selling niche. We saw price break out of the structure before it became a selling niche again in the month of August of last year. And since August of last year, that area had continued to be a barrier for buyers. As you will see, every attempt by buyers to break out of the structure was met by strong resistance from the sellers, and not until the beginning of last month, July, we saw price break out of that structure, and right now price has broken out of that structure for the second time. With this, you would agree with me that we have this key level as a crucial area where we want to be looking out for trading opportunity. Now, zooming into the current structure, that is looking at what has been going on here in the last 4, 5, 6 weeks, the market has been confined within a range bound structure that is between the 1.30500 area and the 1.2690 level, to emphasize the prevailing uncertainty at this point. And of course, this uncertainty is within that key level that we identified earlier. Will price action continue to trade within this range bound structure for a while before price either breaks out of the resistance line for buying opportunity or break down the support line for selling opportunities? To help us navigate this current market dynamics, I have a simple trading setup on the 4 hours time frame that we are going to be using. But before we go into the 4 hours time frame, it's time to pay attention to upcoming economic events that will be influencing the market sentiment next week. By checking the economic calendar, we can identify how upcoming events might affect price action. This helps us spot potential correlations between key economic releases and specific technical patterns on the charts, allowing us to time our positioning more effectively. Now, based on the asset we are looking at for next week, we will be focusing on high impactful events from both the United States and the United Kingdom economic dockets. Now, the first event for next week is coming in on Wednesday, August 21st, and that is the publication of the FOMC minutes. You see, this records the discussion of Fed officials during their last meeting, and it provides the market an insight into the Fed's view on the economy and future monetary policies. Then fast forward to Thursday, August 22nd, from both the US and the UK economy, we will be looking at the S&P Global publication, which will be offering us key insight into the health and performance of the service and manufacturing sectors of both economies. Now, on that same day, we will be looking at the Jackson Hole Symposium, an annual event where central bankers and economists discuss global economic policies, often setting the tone for future central bank actions. And of course, this event will be happening on Friday and Saturday as well. Then on Friday, we will be listening to the Fed chair and the Bank of England's governor speeches. A speech everyone will be looking forward to, as it will also be providing insight into the bank's monetary policy stance, economic outlook, and potential future policy action. And of course, we all know The anticipation of these speeches can significantly impact market sentiment as traders and investors will closely analyze the rhetoric for clue about future policy directions. So these are the high impactful event we will be looking forward to next week, and of course, the anticipation of this event will definitely be uh, um, reflecting on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame where I have a beautiful and simple trading setup to guide our decisions next week. Now, on the 4 hours time frame, after connecting the series of lower highs, that is since the mid month of July, you can see that price action has been on a downtrend. In fact, I have a couple of descending trend lines here, which further emphasize the strength of sellers prior to last week's trading session. And of course, during last week, we saw how price broke out of this trend line. We saw a breakout happen, couple of retest of structure to further emphasize that this trend line does not have the strength to continue to negate the bullish attempt, and we saw it pushing price to a 3-week high at the 1.295 area. Now, at this point in time, we are at a crucial juncture where, depending on how price reacts to this 1.295 during the early hours of next week, will determine what our next line of action will be. Are we going to be buying the GBPUSD or selling it next week? Well, let's see how the market will react to this level. Now, I have about 3 scenarios I'm looking out for next week. Now, one of which is if we see selling pressure resume below the 1.295 area at the beginning of next week, we can be looking at the breakdown retest of the neckline to join a decline, maybe back into the structure. Of course, we all know that whenever price breaks out of a key structure like this, we may likely see price come back, retest the structure in an attempt to continue the uptrend move. And if you look at this structure closely, you will see I have identified a potential demand zone between the 1.286 and the 1.28 area if ever price comes into this area. And of course, we will be looking out for buying opportunities from that particular area. However, if instead price action decides to evolve into an uptrend continuation pattern around this area at the beginning of the new week, then the breakout of that structure will be all we need to continue the uptrend move. So, this is my simple view on the GBPUSD for this coming week. Trust me, I will be with you in the comment section of this video to give us an update on what I will be looking at after monitoring the character of price action around this important structure. If you found this video useful for your independent trading decision this week, I will be grateful you hit on the thumbs up button. Your support not only means a lot to me, but also helps the video reach more traders who might benefit from this content. Thank you in advance for doing so. If you haven't already, make sure to subscribe to the channel for more insights and updates. By subscribing, you will always stay informed about my latest videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.